The secret of Warren Buffett's favorite investment. Warren Buffett is one of the greatest investors of all time. With a fortune worth over $100 billion, people hang on his every word. And yet, when it comes to giving advice to everyday investors, Buffett's answer surprises many. He doesn't tell people to buy individual stocks. He doesn't suggest chasing the next hot company. Instead, he points to something very simple: index funds. Yes, Warren Buffett, the man who built Berkshire Hathaway into a giant, recommends index funds for most people. But why? Why would one of the sharpest minds in finance choose such a simple strategy? Let's break it down step by step. What are index funds? Before we dive into Buffett's reasoning, let's quickly understand what index funds are. An index fund is a type of investment that tracks a market index. For example, the S&P 500. When you invest in an S&P 500 index fund, you're buying a tiny piece of 500 of America's biggest companies. Instead of trying to pick winners, you own them all. As the economy grows, the index fund grows with it. It's simple, it's diversified, and it requires no constant decision-making. Buffett's 2013 letter to shareholders. One of Buffett's most famous endorsements of index funds came in 2013. In his annual letter to Berkshire Hathaway shareholders, he wrote something shocking. He revealed instructions for the money he planned to leave his wife after he died. What did he say? Put 10% in short-term government bonds and 90% in a very low-cost S&P 500 index fund. That's it. Not complex strategies. Not individual stock picks. Just index funds. If Warren Buffett trusts his family's financial future to index funds, that says everything. The power of simplicity. Buffett has always believed that investing doesn't have to be complicated. In fact, complexity often hurts investors. Most people get emotional, panic during downturns, and make bad decisions. Index funds remove that problem. They allow investors to sit back, stay invested, and let the market do the work. Simplicity is often the ultimate sophistication. And Buffett knows this better than anyone. Why picking stocks is hard? Many people believe they can pick the next Apple, Amazon, or Tesla. But Buffett has warned repeatedly that stock picking is extremely difficult. Even professional fund managers often fail to beat the market. In fact, studies show that over 80% of actively managed funds underperform index funds in the long run. So if experts struggle, what chance does the average person have? That's why Buffett recommends index funds. They give ordinary investors market-level returns without the need for special knowledge. The long-term advantage. Buffett is famous for his long-term mindset. He often says, "Our favorite holding period is forever." Index funds align perfectly with this philosophy. They are designed to grow steadily with the economy over decades. Instead of chasing quick wins, index funds let you benefit from compounding. And compounding is what turns small investments into fortunes. This is why Buffett calls compounding the eighth wonder of the world. Index funds give you that advantage automatically. Beating the professionals. Buffett doesn't just talk, he proves it. Back in 2007, Buffett made a famous bet. He wagered $1 million that an S&P 500 index fund would outperform a group of hedge funds over 10 years. The result? The index fund crushed the hedge funds. The S&P 500 returned over 7% annually. The hedge funds lagged behind, weighed down by high fees and poor decisions. Buffett donated the winnings to charity. But the lesson was clear. Even billion-dollar hedge funds couldn't beat a simple index fund. Low fees make a huge difference. Another reason Buffett loves index funds is the cost. Actively managed funds often charge high fees, 1% or more. That may sound small, but over decades it destroys returns. Index funds, on the other hand, often charge as little as 0.03%. That means almost all of your money stays invested and keeps compounding. Buffett has repeatedly warned that high fees are one of the biggest enemies of investors. And index funds solve that problem beautifully. Diversification without effort. Buffett always talks about the importance of not putting all your eggs in one basket. But diversification is hard to do on your own. If you buy individual stocks, you need dozens of them to spread risk. With an index fund, you get instant diversification. One purchase gives you exposure to hundreds of companies across multiple industries. That kind of diversification would be impossible for most small investors to build on their own. This is why Buffett says index funds are the easiest way to invest smartly. Staying calm during market crashes. Buffett has lived through countless market crashes. The 1970s stagflation, the 1987 crash, the dot-com bubble, the 2008 financial crisis, the 2020 pandemic crash. And in each case, the lesson was the same. Those who held on recovered. Those who panicked and sold lost money. Index funds encourage discipline. Because instead of worrying about individual companies, you own the entire market. This makes it easier to stay calm and ride out downturns. Buffett knows emotions are the biggest enemy of investors. Index funds help you fight that battle. The American economy always rises. Buffett has unmatched faith in the American economy. He often says, "Never bet against America." Despite wars, recessions, and crises, the United States' economy has always grown stronger. Index funds capture that growth. They represent the collective power of American innovation, productivity, and resilience. By buying an index fund, you are betting on the long-term success of the entire country. And Buffett believes that's the safest bet of all. Why most people shouldn't copy Buffett's stock picks. Some people argue, if Buffett can pick stocks, why shouldn't we? But here's the truth. Buffett has decades of experience, inside knowledge, and billions in capital. He spends his life analyzing businesses. Most people don't have that time or skill. That's why Buffett himself says most investors shouldn't try to copy him. Instead, they should buy index funds and let the market work for them. It's advice from the master himself. Index funds for retirement. Buffett also believes index funds are the best tool for retirement savings. They are safe, diversified, and low cost. And they grow steadily over time. For anyone building a retirement portfolio, index funds provide peace of mind. You don't have to worry about stock picking mistakes. You just let time and compounding do the work. That's why Buffett included index funds in his own family's financial plan. Global investors can use them too. Even if you don't live in the United States, index funds work globally. There are index funds for international markets, emerging economies, and different sectors. But Buffett still emphasizes the S&P 500 as the strongest foundation. Because American companies are global leaders. Owning an S&P 500 index fund means owning giants like Apple, Microsoft, Google, Amazon, and more. That gives you global exposure through United States. Markets. What this means for you. So, what can we learn from Buffett's love of index funds? That investing doesn't have to be complicated. You don't need to chase trends or time the market. You don't need to pay high fees for experts who underperform. You just need patience, discipline, and low-cost index funds. Buffett has given ordinary investors the blueprint. It's up to you whether you use it. Buffett has always said the stock market is designed to transfer money from the impatient to the patient. And index funds reward the patient. They're not flashy. They won't make you rich overnight. But over time, they quietly build incredible wealth. And that's why Warren Buffett loves them. If this video gave you value, hit the like button. Subscribe for more strategies on money, investing, and wealth. And share your thoughts in the comments. Are you investing in index funds, or do you prefer picking individual stocks? Your answer might inspire someone else to start investing wisely.